Thank you so much for joining me on short notice here, given what's happening in the markets.
Sure.
What's your quick first take on the tariff news that we got here and what it means longer term for markets?
Well, clearly, the markets are anticipating that the tariff regime that the Trump administration just imposed on the world is likely to cause a recession in the United States and on a global basis. It is, in effect, a tax, but it also has the potential of really distorting global trade here in the United States, at least on a short-term basis. It's likely to push inflation up. Car prices, which have been up quite a bit since the pandemic, will go up even higher, along with things like auto insurance, maintenance, and repair. So it's not a pretty picture, and that's what the stock market is clearly suggesting. I think that the market may at some point here have an impact on the administration. I got to believe that Republicans in the House and the Senate are getting flooded with people calling up saying, "What the heck's going on here? My portfolio's gone, my 401k is down." There's a lot of people that have been retiring, the baby boomers, and they're going to be complaining. So I think there's going to be a lot of political pressure on this administration to find some ways to get some concessions and call it a victory and move on from there. So I think the pain in the market isn't necessarily over, but I would not be. I think in some ways it's too late to panic, I guess, is the bottom line.
Got it. When I look at some of the numbers that were thrown out there, kind of what Wall Street was expecting heading into this and what we actually got, I mean, it does seem like a pretty extreme and widespread number of tariffs and the
Right.
percentages and so on, correct?
Yeah, absolutely. Though I think even before the so-called Liberation Day yesterday, we did get to the week before that an announcement that in addition to 25% tariffs on steel and aluminum, there'd also be 25% on autos. That's kind of what turned me more bearish on the economy and the economic outlook, because that has an immediate stagflationary impact, driving up auto prices, and at the same time reducing the demand for cars. Auto industry is still an important part of our economy, and so it looks as though we're going to get some weakness here in the second half of the year. That's sort of an unforced error by this administration.
Let's talk about where the earnings impact could be the most severe. I mean, obviously, you've already mentioned autos. Are there other sectors that you think might get hit harder than others when it comes to, again, corporate earnings and the earnings impact?
Well, I think consumer discretionary obviously is the one that gets hit hardest, because the attempt of the administration is to discourage imports, and a lot of the imports are consumption goods. And to the extent that's the case, they are increasing the cost of those goods. So the retail stocks have already gotten whacked pretty hard on the anticipation that the retailers are going to have to pay more for the imports. The exporters in China aren't going to eat the tariff. They're going to pass it on to Walmart and Costco. Maybe Walmart and Costco will be able to get them to absorb some of it, but I think most of it will be absorbed by the retailers. But I think they'll pass it on to the consumer, and so then that kind of feeds on itself, because if consumers who are already depressed see prices continuing to go up in the stores, and at the same time they see that their stock portfolios are going down, that's not a good scenario for a healthy economy as the year progresses.
Right. If investors are looking for something to do, places to rotate, things that they can use as sort of a port in the storm, do you think that that's a wise move, number one? And number two, if so, where might someone look?
Well, clearly you can turn to your financial advisor and see if they can help you out with answering that question. Clearly, there are strategies for reducing risk. The problem is you may be reducing risk here, and suddenly some kinder, gentler words come out of the White House, and the market rallies big time. So you'll miss that opportunity to get back some of what you lost. But gold has been a steady performer here, though the past day, well, today it hasn't done very well. The Liberation Day is kind of depressing everything except bond yields have come down, which means that bond prices have gone up. But again, I think it's kind of difficult. If you saw this coming a couple of weeks ago, there might have been some strategies for dealing with it. But at this point, I think just we have to accept the fact that these policies have taken us into a contraction in the stock market, which then is likely to become a bear market. The Russell 2000 apparently is already in a bear market. It's down more than 20% from its peak. The Nasdaq 100 is still in correction territory. So is the S&P 500. Look, if you've made a tremendous amount of money in this bull market, you may still take some profits. You probably still have some substantial profits in positions, and maybe rebalancing to some of the areas that are getting cheaper. But if you look at the Magnificent Seven, they have gotten a lot cheaper, and to rebalance out of them at this point may not make a lot of sense. I think that when all is said and done, we'll get through this. I don't think this is going to lead to the Great Depression. I don't think this is going to lead to a great crash like 1929, 1930. There's obviously similarities, but I think the political pressure on the administration to back off is going to be intense if it's not already. And so, and this administration has demonstrated a willingness to negotiate, and they don't want to look bad. So, again, I think what they're going to do is get some concessions from our trading partners and chalk it up as a victory.
So I guess, I mean, if I had to sort of sum it up, I mean, to use the hackneyed term buying opportunity, is that something that you would consider this? I mean, again, given that you're not really foreseeing the true, deep,
Yeah.
painful recession or bear market type scenario.
Well, historically, this is exactly the time when you're supposed to be buying when you've got when you feel like somebody punched you in the stomach is when you're supposed to be buying. But this is not. I don't think this is going to be a V-shaped recovery. We suddenly go from a market going straight down to straight up. I think it's going to be churning around. We thought it would churn around since the beginning of the year. Just we didn't expect it to churn so violently to the downside. But there's no rush. But there are, I think in limited amounts, buying some of the beat up technology names, financial names, even consumer discretionary names will pay off if you're willing to hold on for a while, and a while meaning a couple of years.
One last question, because I probably should have addressed it earlier, but I'm going to do it now, and that's the interest rate outlook. What does this mean from a standpoint of Fed policy and maybe where interest rates go from here?
Well, given the history of the rather testy history between the Fed and President Trump during Trump 1.0, this Fed is certainly in no rush to bail out the administration from what looks like a disastrous policy, a disastrous mistake. Maybe it'll still work out all right, but I kind of doubt it. And the market certainly is giving it thumbs down. I think the Fed's in no rush to bail out the administration by lowering interest rates, especially since that would really hurt their credibility if inflation does in fact make a comeback. I think inflation, which has been down to 2 to 3% on a year-over-year basis, could very easily and will probably go up to 3 to 4% over the next few months as a result of these tariffs. And so we're kind of entering a stagflationary environment, somewhat higher inflation and slower economic growth. I don't think it's going to be a repeat of the 1970s, which was a truly disastrous period for the market and for the economy. I think this too shall pass, but I guess the stock market vigilantes are trying to get the attention of this administration and tell them no mas, make things better sooner.
Yeah. Ed, again, I appreciate on short notice you taking some time out. Thank you so much for your insights. I know our viewers are
You're
going to
welcome.
appreciate them.
You're very welcome.